Hello guys and welcome back to the channel. So I promised you yesterday that I would do a deep nerdy dive into Palantir's earnings, and then I looked at what gives the most value to you guys. So I'm actually going to go through the key numbers that I think you need to pay attention to, and then I'm going to revisit my assumption and tell you if I think Palantir is overpriced, underpriced, or fairly priced, and if I am going to buy more. And unfortunately, I do have to lower my price targets because this earning had some very, very good points, but we have to look at objectively and we have to, look at the whole picture. And unfortunately, the whole picture is good, but it could be better. And I want to really stress that when you watch these videos, my purpose is to give you how I am thinking. It's no financial advice in any way. And as a stock's valuation is so much dependent on your own assumptions, so I really encourage you to make your own assumptions and see what price that lands you at. And of course, you can join the Patreon from $5 a month, where you get access to the Excel table that I'm going to show you. So you can play with your own assumptions there, but you don't need to buy that. You can, make your own or, download someone else's. I don't mind how you do it. It's just very important that you act on your own decisions and on your own assumptions. So as always, if you like this content, please make sure you hit the subscribe button. So this is the Palantir earnings sort of deep dive. This is the value dive. So I just give you the most important things. So to be honest, I don't care about the gap profitability. Obviously, this is the biggest news from the earnings, and that's why the stock is up 30% in just 2 days. But what this is good for is that it's going to create a lot of demand for Palantir stock. Also, this is where you have to distinguish between the company and the stock. So for the stock, not for the company, this is a big thing because institutional investors can invest into this. And it seems to be that there has been a huge shift in companies and in investors. And basically, investors don't care so much about the growth anymore. They want to see profitable companies with good cash flows that they know is going to survive the coming recession. And Palantir basically showed that they are this company. And I think this is why the stock price reacted so much, because this, shows that there's going to be a lot of buyers in the future, institutions, and this will put an upward pressure on the stock. But it doesn't, in my opinion, doesn't do anything with the thesis that we have, because we are in Palantir for the next 10-20 years. So essentially it didn't matter if they became gap profitable this quarter or they were going to do it in 2025. If I could, actually, I would much rather trade them to be in minus and instead grow more. That's just my mindset, because it would make the company more valuable in the future. But you gotta take what you get. Here is the bad thing. So the revenue grew 18% year over year. And unfortunately, this is looking at the quarter, there is a objective big slowdown in Palantir's revenue growth, in everything growth, in the free cash flow growth. So there is just no other way around it. There is a big slowdown. Adjusted operating margin, 22%. That's okay. What I really, really like is that they're closing significantly more deals, and their customer account is increasing 55% year over year. So that's very, very nice, because Palantir is a company that expands with customers. So that means that even if they're acquiring a lot of new customers, it doesn't really show up as extra revenue, because they run pilots, and then those customers have to like the product and then order more and more and more. And years after now, this is going to make sure that they have a very solid growth that we're going to like. So the revenue grew 24% year over year. Again, quite far from the 30% that we hope to see. And this is where you see that there is an objective slowdown. I'm also going to show you in my Excel table what it looks like. And as a prudent investor, I have to adjust this in my model, right? So here's an important one. Government revenue growth, 19% year over year. This is, again, below the 30% that we're expecting. And commercial revenue growth, which is very nice, but I mean, it's basically the 30%. Now, what's a silver lining here is that nobody's invested in Palantir because of the government. And currently, as you can see, this is a bit more than half of the business. And this is the part that is really exciting us, or at least me. And this is the one that is growing faster. So in many years from now, if they just can keep this growth level, then the growth is going to be back in the Palantir story. But right now, based on everything, they are slowing down. So here again, you can see how nicely the customers are growing. Super nice quarter over quarter growth. And now we come to another very bad thing, and that is their guidance. So they are guiding for the full year. They're guiding for GAAP profitability, which again puts an upward pressure on the stock because institutions can buy it. But the revenue growth is only 17%, and the adjusted income is also very slightly up. It's not really growing, so I'm not very happy to see this. However, when I listened to the conference call, I did get the idea that there's a huge sandbagging in this, and this is basically what they already have lined up, and they have a bunch of government contracts that they cannot give news about and they don't have news about. And then in the conference call, they mentioned that there is international governments, because they have seen what they have done in Ukraine, that are interested, and they don't know what's going to happen there. And then there is a bunch of commercial contracts that are on the line. So I got the idea that there is a lot of sandbagging in this, but even if they beat this, so you have to keep in mind, let's say they beat the 17% to 20%, which will look very good on the headlines, right? But a lot of us Palantir investors want 30%. We have 30% in our models, and we unfortunately have to revise that because we're just not being prudent as investors, or we're being blinded if we don't revise this. So these were the important points. Now I'm going to go to the model that I have. This is the one that you can get if you join Patreon for $5 a month in the description box below. Among other things, you also get access to exclusive videos. And this is what I mean. You come here and you look at their quarterly growth, and you see it's going from 49 to 36, 34, 30, 26, 22, and now 19%. So it's an undeniable slowing down. Same with the operating margins, 34, 30, 29, 28, 23, 17. This is still my estimate, but we know what it was. It's still a slowdown. So this is the part of the table that I have updated before the video, but I did it back to how it was. So this is my base Palantir model. And again, I'm thinking with 30% revenue growth, and then in 2025, that would result in 4.1 billion in revenue with a 25% adjusted operating margin. That would be a 1 billion operating income, and we slap a 40 P on that one, and then you get a market cap of 41.7 billion. And then you divide it by the stocks, and you can see I'm counting with some dilution. I do think that I count a bit too low on the dilution. I will double check this number. But this would give a stock price of 18%. And normally I like to shoot for 30% upside per year. And for this 30% to come through, the price would have to be below this $8.8. So again, maybe you are happy with getting 15%, then the price would have to be $11.68. This is why it's so nice, because you can put in your assumptions both on the growth, on the operating margin, on the share dilution, on the PE. You can change all the factors and see what stock price you would get. So again, I was showing you my original thesis. However, this does have to be adjusted because I don't believe that the 30% is real anymore. Again, they just for 2023, they were guiding for 2.2 billion. So I'm going to adjust this to 20%. I would like to believe that the growth is going to pick back up. But this is a belief, and I feel I would not be a prudent investor if I would go on this belief. So for me, it would be a bonus if it would happen. If I have to go based on what I see is happening, I feel I have to count with 20% growth. Again, this is where you can play with this. And you can see that if that is my assumption, the price would have to be below 636, which it was, right? And again, keep in mind, because maybe you are going to say that Vince is becoming a Palantir bear now. I'm looking for a 30% per year return on a stock, right? And Palantir it actually was below this price, this 6.36 price. So this is revised assumptions, right? This is the 20% growth assumptions. And since this point, the stock has run 45%. So for me, Palantir has run a bit too much. I can still live as a shareholder with, let's say, 20%, but then for me, the stock still has to be below $8.08. So this is what I think. I think that Palantir, based on this calculation of 20% growth, if you want to see what others see in the stock, then currently what you can get, if I'm correct, is about a 10% return, which is matching the market. So I would say that Palantir is very fairly valued at this point, so there's not a lot of upside. So this is why I will not be adding more to my position. I have over 100,000, I think, something like that, around 100,000 in Palantir. I feel very good with that position. And if the price comes below $8, I'm going to be a buyer again if I have money. I'm a very, very happy shareholder. I want to stress this because I do think that the company is doing very good. And one thing that I forgot to say is I'm very impressed with Alex Karp. I'm actually going to make an own video about it, how much he has changed. He is this guy who is like telling you, I'm not changing. I'm a bad salesperson, and you really have to look at the stuff that is happening and not what he's saying. Because if you look at what the stuff that is happening, he is actually listening to critics. He's adapting. He is changing as the situation is changing, and I love it. They realize that the market doesn't want growth as much as they want GAAP profitability, so they showed that they can become GAAP profitable. So now we have a nice increase on the stock. Then we were complaining, I don't know if they're listening to us or the market, that it's very hard to understand Palantir. They need, different ways how they can market, and they started doing the foundry conventions. Then, the investors were complaining that we don't like the philosophy in Alex Karp, shareholder letters, and we don't like him talking about philosophy on the earnings call. He should talk about the numbers. And you can see a huge change from how he was just a year ago onto this earnings call. So this makes me, if anything, super bullish on the company, but the company is different from the stock price. The stock price has run 30% just in the last 2 days. So it's a bit overvalued for me, but if it comes below this $8, I will be a very, very happy buyer. So let me know, guys, what you thought about this conference call. Let me know if you think that the stock is overvalued now or undervalued. Let me know what you're doing. And thank you for watching. Make sure you're subscribed, and I will see you in the next video. Ciao, ciao.